Anthony Albanese, Jim Chalmers, and the ALP seemingly want to increase your taxes again, and they have form in doing so. After all, there was the Stage 3 tax backflip, and there's been the moves to increase taxation on superannuation, including a tax on unrealised capital gains. The latest flashpoint is property, and in particular, the concerns about whether or not they're going to remove negative gearing, so to speak, and also increase the capital gains tax rate. Now, of course, negative gearing itself is a slightly misleading term, as it simply refers to expensing an input cost, much like is the case with literally every other input cost, whether it's in personal taxation or in business taxation. Negative gearing involves taking a cost, being interest, for example, and then using that to offset income. It's the exact same thing as with literally every other expense, but has become controversial because it has a name that gives people the ability to grab onto something. Nevertheless, there are seemingly moves to try to remove it. This is because the Greens have asserted they'll only negotiate with the ALP over housing policy if the ALP moves to remove negative gearing and increase capital gains tax. Anthony Albanese, for his part, has refused to rule this out, as is evident from an interview he gave on the ABC with Patricia Karvelas.
Are you saying negative gearing and capital gains tax concessions are absolutely off the table for you?
Well, they're tax policies.
Yeah, but are those tax policies,
housing policies,
are those tax policies completely off the table for you?
Well, Patricia, I don't answer the sort of those sort of questions in the way that
you mean good ones.
Yeah,
that's a good question. Are you going to say no to those or not?
Clever. They're things that journalists. The next question is, when will the election be?
I know that's not my next question.
Yeah, well, they're not terribly clever questions.
Now, the most fundamental issue with this, to my mind, is that in Australia, the only way to get ahead is by investing. If you're just working for a company, then you become a wage slave. You become an indentured servant to the company and also to the government. The only way to mitigate this is by investing. By investing, you're able to get an inflation-indexed source of income. Furthermore, the investment returns are going to be taxed differently. For example, you'll get long-term capital gains tax discounts and franking credits for dividends, whereas if you're just working for a company, you're going to be taxed at your marginal tax rate, meaning that the harder you work, the more time you lose. And ultimately, you're going to be losing 50% of the time you work to the government. And let's face it, the government isn't spending your hard-earned money and your time very productively. Investing is the only way to possibly get ahead in Australia and to not become indentured servants to your company or to the state. The government, by attacking things such as negative gearing or the capital gains tax discount, is attacking investment and is therefore attacking your ability to achieve financial freedom and independence. One wonders whether that is the ultimate goal, to make you reliant on the government, to make you wage slaves, to make you slaves and servants to the corporation and to the government. These attacks on so-called negative gearing and capital gains tax are an attack on freedom and liberty. That is my biggest normative concern with this whole issue, in addition to myriad other concerns that I'll go through in detail about this type of policy. And this is a problem whether or not you currently own an investment property, because aspiring to own an investment property is the way to achieve that type of financial freedom. You don't necessarily need to buy your dream property or your perfect property. You could rent where you're currently living and then invest in a property through a method called rent vesting. You can just invest in a property that is relatively small to begin with, building up runs on the board, building up baby steps toward getting a bigger portfolio and toward buying your dream property to live in. It's all about getting runs on the board, and that can start off by buying a relatively inexpensive studio and just building up your portfolio. And indeed, those relatively inexpensive studios often have reasonable yield, enabling you to establish a bit of a cash flow buffer. This, therefore, is important whether or not someone owns an investment property right now or aspires to do so in order to get their own financial freedom. Now, Anthony Albanese's refusal to rule out this tax hike is slightly telling. It's reminiscent of their backflip on the Stage 3 tax cuts, which in essence became a tax hike because they reversed a previously legislated tax reduction. Furthermore, it's reminiscent of the moves to increase taxation on superannuation, including the proposed tax on unrealized capital gains. Now, the real issue is why it is bad to remove so-called negative gearing and why it is bad to increase the capital gains tax rate. This is worth further analysis because it affects many people directly and many other people indirectly, and in essence becomes an attack on aspiration, and I'll try to explain why. A further issue is where exactly is this going to stop? Because as the adage goes, the problem with socialism is you eventually run out of other people's money to spend. So for example, say they were to increase taxes on property investors, well, they'll eventually spend that money and then move on to owner-occupiers, which would clearly result in things such as an increase in land tax or an increase in taxes when people go to transact that property, or a removal of the capital gains tax discount on the family home. And all throughout this, let's not forget that the top income owners pay a significant portion of taxes. For example, the top 1% of income owners pay 20% of personal income tax. This is a very large and in fact slightly disproportionate amount. By contrast, the bottom 41% of workers who are earning less than $45,000 pay just 2.3% of all income tax. This highlights that higher income owners are in fact paying more than their fair share, to use that slightly hackneyed euphemism. But in any case, on to property taxes, and this is a major issue for several reasons. The first, and to my mind most obvious, is this would be a retroactive change on existing things that people have already done. For example, people have already gone out and purchased property. They've already gone out and changed their position on the basis of existing law. The government would now be retroactively changing the environment in which they are operating. And this is generally repugnant because it creates a lot of sovereign uncertainty. It creates a lot of sovereign risk because now investors in all fields will know the government will just go and change the rules of the game after the fact. Now, it's sometimes asserted you could grandfather in changes to negative gearing or capital gains tax. However, that doesn't really work because after you've made the change, people can easily see that the government might just then go and change it further for existing investors, or maybe existing investors with a wealth portfolio over a certain amount of dollars. The government loses all credibility, which in turn undermines trust in the government when people are going out and investing, which in turn undermines growth, and in the context of housing, that would undermine supply creation. Next, it is generally disingenuous. Negative gearing is sometimes presented as a tax subsidy. But as I've indicated, it isn't a tax subsidy. It simply involves deducting an expense from the income. This is the same in literally every other area. However, in no other area is this even remotely controversial. It's what businesses do every time. When you go to Coles to buy an apple or buy some milk, Coles will deduct the expense it incurred when it went out and purchased that apple or that milk or whatever the case might be. It is common practice to deduct expenses from income. This happens everywhere. Property expenses are the exact same. It's honestly a little bit absurd that the rhetoric is in fact different over this. Next, it then runs into the problem, this is in essence an asset seizure, because it would be seizing another person's cash flow rights, i.e. it'd be an attempt to take more of those cash flow rights and then filter it into government coffers. This in essence is tantamount to property seizure, and the reason for that is an asset is at its core a bundle of cash flow rights. In the property context, that's a bundle of earnings from the property. The government here would be in effect seizing those earnings, therefore seizing the cash flow rights, therefore in essence seizing part of that underlying property. Let's make no mistake about this, therefore. Movements to remove negative gearing in essence become movements to seize another person's property. Next, negative gearing is a necessity for new construction builds in the economic environment. And the reason for this is because of construction costs. Australia needs more property supply, but creating property supply costs money. To finance this, well, developers need to be able to sell those properties at a high enough price. This means they will often need to be able to sell properties to both investors and to owner-occupiers, because sometimes owner-occupiers won't be able to afford the money necessary for the construction to get off the ground. And this is because construction is incredibly expensive. But if negative gearing doesn't exist, well, investors would not be able to deduct the expense incurred in that property from income, and therefore they'd not be able to justify the price required for that new build to get off the ground, and therefore supply would decrease. It wouldn't be that existing properties somehow disappear, rather it would be that new supply doesn't come onto the market. And since the population increases over time, if supply is not keeping pace with that population, then you end up with a housing crisis. Now, it's often talked about the idea that if a negative gearing disappears and then investors disappear from the market, then those properties will be bought up by owner-occupiers. And yes, that occurs. However, what we are talking about is new supply coming onto the market, because if the population is increasing, you need additional supply. Something transacting from an investor to an owner-occupier doesn't address that situation. Furthermore, many owner-occupiers have fewer people per property than does, say, an investor. In an investor, you might have share houses and the like, whereas an owner-occupier is more likely to have more rooms per person, which in turn reduces the supply of rooms, i.e., you need the investors to increase the supply of properties. And without those investors, the construction simply won't get off the ground. Next, as with any tax hike, the money just goes into government coffers for them to waste. This is actually bad for economic growth, and I'll explain why. The reason is that when you are spending your own money, you're frugal, you're prudent, and you spend the money productively. You spend it in something that is worthwhile to you, that makes sense to you. But when politicians are spending money, they're spending other people's money. They have no skin in the game. They don't need to spend the money in a productive or effective way. They just need to spend the money in a way that they think will get them elected. And in particular, because of how elections work, they'll get them elected in their electorate. Isn't necessarily good for the whole population, is good for them to get re-elected in their specific seat. And even worse than that, is good for them to be able to hoodwink people into thinking they are doing something good. And the reason this works is because of information asymmetry between politicians and voters, i.e., voters don't necessarily know the intricacies of how the policy framework works. Rather, they rely on the media or various pieces of information coming from politicians about what is going on. And if politicians are lying to them or misleading them, and if the media isn't holding those politicians to account, then it is very easy to hoodwink voters because of the information environment in which people exist and the limited time that people have to be able to pay attention to those policies. And it means the money that politicians are spending is inherently less productive and therefore more inflationary than the money that you or I are spending individually. Another way of thinking about this is that if your policies are to rob Peter to pay Paul, you can always count on the vote of Paul. Anthony Albanese and the ALP, therefore, are seemingly intent on increasing your taxes. Their failure to rule out any such tax increase is itself telling. This is a sign of things to come if one, for example, were to have a Green Labour minority government. Now, you might not currently be a property investor, but if you ever aspired to be, this is an attack on you. And that leads me to the next fundamental problem. In Australia, investing is the only way to really get ahead, so to speak. Because personal income taxes are so high in Australia, you need to invest. You need to invest in property or in shares or in myriad other areas for you to have any chance of getting ahead. And this means one often needs to aspire to be a property investor. Now, people often look at property prices and think, oh, it's really, really expensive. But people can rent vest, for example, i.e. they rent where they're currently living and invest elsewhere. That's a great strategy for some people. Furthermore, just getting one run on the board is great. That run might be a studio that is relatively inexpensive. Anything is good for getting ahead. It doesn't need to be the perfect property, it just needs to be a property to try to get yourself started. And when you've got a property and you're building up equity in that property, admittedly it has to be a decent property, but not necessarily the perfect property. When you're building up equity in that property, you start to get ahead. And I often find that people are really focused on buying the perfect property, trying to find a really cheap property in a premium suburb in Sydney or in Melbourne, when in reality, people should be focusing on getting a run on the board so they can get ahead as an investor. And being an investor is the only way to achieve this in Australia. Otherwise, you end up being an indentured servant to both your corporation and to the government. People, if they're just subsiding on an employee income from their corporation, are going to be screwed by the corporation and by the government. Investing is what people need to do. And therefore, the government's attack on investors is a fundamental attack on individual freedom and liberty. And this is the biggest, most fundamental problem with what they're doing here. But in any case, let me know your thoughts about this in the comments below. I'd be interested to hear what you think about this whole situation.